I'm Laurent Meunier from Safe Pacific Financial, and today we're going to be talking about how life insurance can help with the estate planning process in BC or any province in Canada. There's a few reasons why life insurance comes in handy for your estate plan. First, life insurance pays out way faster than probate. Second, because it pays out quick and clean, it can be used to help to pay estate taxes, especially since life insurance pays out tax-free. Lastly, you have the flexibility to choose your beneficiaries and to adjust how much each receives with life insurance. And the added bonus is that anything paid out by your life insurance is private. So let's talk about number one. When somebody passes away and hopefully they have a will, that will goes through a process that's called probate, which basically is going to go and prove the will and finding all of your assets. So let's say you have 10 Lamborghinis, 10 mansions, and 10 private jets. And then when you pass away, somebody has to go find those things, see if you really own them, and then find out how much they're worth and if there's anyone else that has a claim to them. So in BC, that person would be your executor. And if your will is clean and all the people involved in it get along and nobody fights, right now doing that probate process is going to take you 18 to 24 months and the quickest. So that's if everything goes perfectly smooth. So what happens during those 2 years? Well, your family still needs to pay their bills. They might have a mortgage. They have other financial responsibilities that they need to take care of. What helps with this is a little bit of money that's not tied up in an estate. And life insurance can help here because life insurance generally will pay out within a few days or weeks after a death certificate is provided to the insurance company. So depending on the company, the time frame is anywhere from 8 to 14 days for most cases. Obviously, if they need more proof or something, or if something happened, it could take a little longer, but like 90% of Canadian insurance companies are paying out their claims within 2 weeks. Another reason that people want to have insurance as part of their estate plan is to pay taxes. So this doesn't get talked about a lot. One of the major expenses when you die is taxes. Here in Canada, we don't have something called an estate tax like they do in the US, but we do have a final tax return that needs to be filed for anybody who passes away. And then the way that they calculate what you pay is through what's called a deemed disposition of your assets at that time. And then they assumed that you sold everything on the day before you died. So they want to know how much was your house worth, how much was your business worth, how much were your stocks worth, how much your Bitcoin and your cars and all the knickknacks that you've collected throughout your life, how much is everything worth? And then once they calculate a value of that, they tax you on any gain of that. And then that tax is payable at whatever the next tax year is. So next April, that's payable. And you don't get years to figure this out and to pay, right? Somebody needs to pay it right away, and it's all coming off the top of your estate. So for example, let's say that something has gone up in value that you want to keep in the family, like a property, right? And you're the parent, but maybe your kids don't have the money to pay the taxes that will be due. And then say you have a ski cottage or like a cabin, right, by the lake. So in Canada, all of those have gone up in value a tremendous amount in the last little while, and there's a huge amount of capital gains that are going to be payable on those. Well, you can calculate what the tax is going to be in the future. You won't be able to get it exact, but you can get a good estimate. And then you can set up an appropriate amount of life insurance to cover that. A more specific example would be to say, somebody's family had bought a ski cabin in Whistler in BC here for $500,000 20 years ago. And then now it's worth 1.5 million. It's gone up by $1 million. Half of that is going to be subject to capital gains at whatever your marginal tax rate is. So just call it 30%. Half of it's 500 grand, taxable at 30%. Somebody has to come up with 150,000 to pay the taxes on that house if you want to keep it in the family. So how are they going to do that? Well, one, you could start saving up that money now and invest it, and hopefully it'll turn into 150,000 by the time the kid's parents pass away. Two, the kids could take out a mortgage on the place when the parents pass, but they also might not be able to qualify. They might have other mortgages. They might have other sorts of things going on in their life. They're not trying to mortgage a second property. Or three, they might have to sell the place to pay the taxes. But really, you don't want to sell it because it's sentimental. You've had it for 20 years. The kids have had Christmas there all these times, and it's a really nice place in Whistler. You don't want to lose it. So what can you do here? You say there's an expected 150,000 payable now. But what if the parents live another 20, 30 years, and then you want to just appreciate the condo and you run some calculations. So once you run those numbers, maybe the future is a $400,000 or $500,000 tax bill. So you get a $400,000 or $500,000 life insurance policy. This way, when the parents pass away, the insurance pays out to the kids, and then the kids use the money to pay the taxes, and they get to keep the chalet in Whistler. Plus, life insurance in Canada is tax exempt, and the life insurance pays out tax free. So if you know that you're going to be paying out taxes on your real estate, a good way to pay those taxes is to have the proceeds of a life insurance policy ready to pay those taxes. And like I said before, it's probably going to take a couple of years for your estate to get settled, and the bills will still keep coming in. So it would be nice to have a couple $100,000 or $1 million in life insurance to pay those bills. Another benefit of the life insurance in your estate plan is that it's private. So if you have a life insurance policy and you have a properly named beneficiary on that policy, when it pays out directly to the beneficiary. And nobody's able to find out about it unless somebody tells them. And the life insurance company is not going to advertise who they paid out claims to. They're not allowed to. So there's a lot of reasons that people might want things to pay out privately. Maybe it's paying privately to children from a previous marriage, or the current marriage, would not be okay with it. But you think that it's really important. Or maybe the parents want to give more money to charity than the kids want them to, right? So one way to guarantee that that money is going to go to the charity is to put the charity as a beneficiary of your life insurance, and then you know it's going there. If you gave that money to charity in your will and the kids are not happy with it, they could challenge it and they could take it to court, and a judge could potentially reverse that decision. So in BC especially, a judge has a tremendous amount of power in how your estate is going to settle if somebody takes it to court. One thing that people don't often realize about life insurance is that you don't have to pay the whole amount to somebody in one shot. So some people's kids might be young and they might be immature and not good with money yet. So you don't necessarily want to give them $1 million or $5 million or $10 million cash because they might blow it. One thing you can do with insurance is do what's called an annuity settlement option. So you can say, well, I want the life insurance to pay to my kids, but I want to give them this much per year for, X amount of years, or I want to give them every 6 months or every month. So however you set it up with the insurance company to pay, this is how they're going to pay the beneficiaries. They're going to pay it the way you said, and the kids can't change that. So you can also put multiple beneficiaries on your policy. So if you have multiple kids, or you want to include your nieces and your nephews, you can either list them all individually, or you can list them as a group, and you say you want to give your 10 grandkids equal parts. So, at the time of payout, that would be 10% each. You can also adjust how much each beneficiary gets. So you can either set like a dollar amount, or you can do a percentage. So say you have 3 kids, you give each kid 33%, or you give one kid 70 and one kid 20 and one kid 10, whatever you like. You also don't have to name people as your beneficiaries. You can name charities or other organizations. So some people will donate to causes that they believe in, like arts organizations or saving animals, or they'll give money to a church or a foundation or a company. So you can see that life insurance is immensely helpful when settling an estate in BC. The extra cash that pays out comes quickly, and it can come in handy when you're paying taxes or bills or other expenses. And that flexibility of choosing your beneficiaries allows you to pay out how much you want to who you want to pay it out to. So if you got some value from that, please like it, share it, subscribe, comment. And if you're interested in learning more about how life insurance can help you with your estate plan, please contact us. There's going to be a link below in the description of the video. And if you're working with a lawyer right now and trying to get your will and your estate plan all set up, and you need the insurance part set up, we love doing that. Your lawyer will be very happy to work with us. All right, that's it for now, and I will see you next time.